How's it going out there? Welcome to Stock Talk with Mike. So last week was an absolutely crazy week in the market. We had the GameStop, Wall Street Bets, Reddit group battle it out with big hedge funds, which caused some absolutely insane price action, causing GameStop to shoot to the moon, as well as a bunch of other heavily shorted stocks. Meanwhile, we had a number of big earnings beats by companies, which caused some mediocre response in terms of stock price action. And we had a market that was red on the week, and actually a fairly big red week. It was actually the worst week in about 3 months overall in the market. And now the futures here over this weekend are also pointing down, so I'm expecting a down Monday. But honestly, I think this market in general just hates uncertainty. And if there's a bit of confusion right now and concern that the system is broken, that I think it could add some additional volatility. We could see a bit of a sell-off. And honestly, I just view that as a buying opportunity. I'm locked and loaded, as heavy of a cash position as I've ever had because of this big run we've had, and looking for opportunities to add to some of my long positions. But I think there's an area of market I want to talk about today that's been kind of falling out of favor and not talked about a lot as of late, even though we're getting a little further towards seeing an end in sight here as vaccines roll out. And that's the reopening trade. I think a lot of those trades have just sort of fizzled out and people aren't talking about them. And in my opinion, that's the perfect time to be looking at these. So I'm already in a couple and I'm looking at a couple more. And I want to talk to you about those today. So if you're new to the channel and want to consider subscribing or liking this video as well, that would be great. This is a bit different than my typical video. I like to dive deep into disruptive and innovative companies and also look at their fundamentals, and I'm generally a long-term investor. I'm going to talk to you about 4 companies today. I'm going to talk to you about Carnival and Boeing as beaten down reopening trades. And then I also want to talk to you about Airbnb and Disney as not so much beaten down reopening plays, but good companies that I think are good long-term investments that I think could be big benefactors coming out of the other side of the pandemic. First, let's look at Carnival, the big cruise line company. It's currently trading at $18.67 a share. At its peak, it was $72 a share and was trading between there and a range to about low of 50s before the pandemic in March. But getting back to all-time highs would be about a 4x from current prices now. If it took 10 years, if you think it could get to the all-time highs again in 10 years, that would still be a 15% return per year. But obviously, I think they're going to recover a lot faster than that. Even if it took 5 years, that would be a 30% return from here. Now, they got some issues, right? Obviously, like they got almost no revenue coming in right now. But they just recently reported their earnings. They got $1.9 billion in cash, and they do have access to financing. They feel like with no revenue coming in, they can cover 2021 and then also have access to financing. And then they've actually extended out any new ship orders to 2024. And even then, it's only like 1 and then 2. So really slow phased approach, so that once they start recovering, that they can quickly repay off debt as well. And they've actually streamlined their fleet during this as well. They've sold off 13% of their ships, and these were inefficient, smaller ships as well. So they'll be more like lean and mean when they come back into operation. And there's a lot of pent-up demand. I mean, the cruise industry was growing prior to the pandemic, and people are going to want to travel again. So I find this pretty interesting trade now. It seems like whenever we get some good recovery news, that it's shot up from sort of this level or a little bit lower up to the mid to higher 20s. And right now, it's getting back towards that base in the 18s. So yeah, I think anything below 20 here actually is quite interesting. I don't hold any Carnival right now, but this is what I'm seriously considering as a small trade. Next, I want to look at Boeing. Of course, they've had the double whammy. They had the 737 MAX fiasco followed by the pandemic. So at all-time highs, they're around $440 a share, and now they're trading down here to about $194. So it'd be about a 2.5x from here, getting back to all-time highs. So even if that took 3 years, if you think they'll get there again, that would be about a 30% return per year, which is, obviously well above like 3 times out of average market returns. And, honestly, they've already made some headways with the 737 MAX. That's already been approved for recirculation. They've already delivered 40 of those to airlines already, and those will continue to roll out. And they still have a large component of their business still operating. So they just reported full year Q4 and full year results, and they had revenues on the year of about 60 billion, whereas all-time highs they were closer to around 100 billion. So they still have, remember, their defense and military contracts. They have satellite systems as well as space and launch systems. So those areas of their business are still, I guess, doing quite well. It's really the commercial airline segment that is decimated here. So I have a small position, more so as a trade in Boeing, as I'm looking for areas of the market that maybe aren't so frothy that could see some upside in the recovery. Because I think, honestly, it's difficult for wait for news on this, because I think it'll happen really quick. I think, we've already seen in all these recovery stocks some sharp spikes whenever's been any kind of news regarding the pandemic. So my idea, I think, would be to get into these companies now and hold them through news. And as we get more, anywhere near sort of, pre-pandemic levels, I'd probably be looking to take profits. Next, I want to talk about Airbnb. So this is clearly not a beaten down reopening trade, but I'm still watching it closely anyway. This is a company that I would like to have a long-term position in. And I did recently take a small, about a quarter position on a pullback to about 168 recently. But honestly, this is one of those stocks that's just come flying out of the gate and hasn't presented a lot of real buying opportunity. I was hoping for a bigger pullback closer to IPO prices, and it just kind of hasn't happened. So honestly, though, I'm kind of hoping for kind of a solemn, kind of negative Q4 report when they report final year numbers. But they are expecting about 25% decline in revenue in 2020 over 2019. So I think best case scenario, coming out of Q4 earnings, you could expect kind of flattish and to, possibly even some negative pressure on the stock. And that might be that buying opportunity. I know for me, where I'm hoping to maybe load up some shares to build up a long-term position. But I'm hoping we get levels a little lower than where it currently trades today. But I do still think when those opportunities present themselves, there'll be buying opportunities, because I do think they're going to be a real benefactor coming out the other side of the pandemic. Because I know I've seen a number of surveys that have said that travel is the number one thing people are missing here during the pandemic. And honestly, they've shown a lot of resilience, with revenue only expected to be down about 20%. They're faring a lot better than the hotels, as people's preference during the pandemic has been staying in Airbnb over hotels. Anyways, the company I'm very interested in for the long term. It's just trying to find that right price for an entry point. Lastly, I want to talk about Disney. So they're not a beaten down per se reopening trade. Off the March lows, they've actually gone on to reach all-time highs this past year at over $180 a share, currently trading at about 168. And they've been real benefactors of their massive subscription growth, paid subscribers for Disney Plus and their other platforms. They're actually at over 100 million subscribers now, which is over half of what Netflix has. So that in itself is pretty impressive, pretty remarkable given how long they've been at the subscription service. And I think obviously just knowing they have some of the best entertainment assets in the world, I think when their theme parks and studios come back online, it's going to be a huge boost to Disney. And, and I can see them at that point reinstating their dividend as well. And I feel like during this pandemic, with the growth in their subscription services, that they've been re-rated from a valuation perspective a little bit. And I think that'll continue. So I see Disney doing pretty well coming out of the other side of the pandemic as a good, solid long-term company. So just an area of the market worth giving some attention right now. I feel like the reopening trade has sort of lost interest, or investors have sort of lost patience with it and throw money into more speculative areas of the market that have seen such good returns as of late. The speculative market's just gone kind of crazy, right? A lot of pre-revenue, big idea companies that have just shot to the moon. And those companies are so hard to put a value on and often get hit the hardest when we see a downturn because they are hard to value. I mean, they haven't shown yet a clear path to what their revenue, what their earnings is going to look like. And honestly, a lot of really important disruptive technology, it doesn't always translate into a long-term successful, sustainable business model. So keep that in mind. It's important to have that diversity in your portfolio. Even companies that have absolutely been killing it from an earnings and cash or revenue perspective have just sort of been shooting to the moon as of late. And it's really hard to find value in good companies right now. So this is an area of the market that might be worth taking a bit of a closer look at. So that's about all I have for you today. Thank you so much for watching. Happy investing.